Hello and welcome to another update video about Solana. Yeah, Solana continues to be in this boring corrective phase. However, I have to say the price tries to break out of this descending trend line. So maybe we are looking at the start of that next move up. I think a lot of charts are ready, including Matic, Bitcoin as well. Yeah, just the bulls just need to show up, and Bitcoin needs to take the lead, and also Ethereum is ready for further upside. But it's just that overall we are still caught in these boring ranges, and until we see some clear signals, it's best to assume the correction is still unfolding. I mean, to be fair, I'm looking at a bullish scenario here, especially as long as our key support at $84 down there is holding. Actually, maybe I should take the 8250 level off the chart, because that's the, yes, it is the 1.618 extension level of the initial A wave down. That's a typical target for a C wave, but what I really don't want in any wave 2 is a sustained break below the 78.6 retracement, so I take that out. So yeah, we've got here basically our support area still. I do have to shift it a little bit to the right now, because the market, yeah, the market doesn't really move, so it just takes time, and we just have to move it. Not much going on in these markets at the moment, not much going on, whereas the stock market today is super bullish again. The S&P 500 shows another upside extension again today. I think we're nearly at 5,000 points now. Crypto isn't doing much, so again, a lot of people are still talking about the correlation between the stock market and crypto. Well, I think they've decoupled a long time ago. Sometimes they are moving together, but most of the time they're not really correlated. And we're still looking at this setup. We have to focus on the chart that we see right now. We're still looking at a 5-wave pattern to the upside from the 23rd of January low here to the 30th of January high. By the way, I'm focusing only on the short term, because long term nothing changed, and short term even here struggling to find anything new to say really. And yeah, at some point when we all run out of things to say, hopefully things are going to move. But again, still inverse head and shoulders pattern here on the chart. Left shoulder, head, right shoulder. And the neckline remains in the region around $107, $108. It's a bit ambiguous where exactly, but it's a bit of a range anyway. Prices are too dynamic. So it's between 107, 108, where we have a bit of a resistance zone to overcome, indicated by the red line. That's the neckline of this inverse head and shoulders pattern. The measured move, measured target, just by looking at the inverse head and shoulders pattern, by taking the length of the height of that head, and by adding it to the breakout point, if we get a breakout, and we're looking at $140 plus, okay? Now, that is pretty much in line with my Fibonacci extensions. So I typically don't, talk about these traditional patterns much, because I'm looking at rather the Elliott waves. But even here, the very first target I'm looking at, but that would be the, let's say, the bearish structure, where it's just going to form a more extended corrective phase, A, B, C, which could lead to a breakdown again. Here, even here, after a breakout, we should reach $125, which is the previous high. But if it's the third wave up, so basically more bullish, which is what I'm going to lean towards, if we get that breakout above $107, then I think we're looking at 134, better, $140. The 1.38 extension is typically an ideal target for a third wave. So yeah, I mean, that's pretty much in line with that measured target of the inverse head and shoulders, right? So again, that's sort of what we can expect after a successful and sustained break above the $107 mark. Until then, it looks like we are still in a corrective phase. It's coming down in a corrective fashion, which is good. What does that mean? It means that it's certainly not impulsive to the downside. Why is that important? Because impulsive to the downside would mean we're looking at a 5-wave decline, which is quite aggressive, which would mean there is a big risk that this support area is breaking. At the moment, the move down is nice and slow, overlapping, messy. A lot of people will talk about manipulation when we're in a correction. They always do. It just means we're in a correction. Always happens, especially in a wave 4 or a wave 2 correction or B wave. I mean, in all of these corrections, it's typically the talk is about it's manipulation. Well, it's just normal corrective behavior typically that we witness all the time. Especially crypto corrections can be very, very frustrating. Bear in mind that the movements in crypto, they are very short and swift and, aggressive. The corrections take a long time. Now, looking at this, the support zone is defined between $94.88 and $84. We have additional support at $91.57, $88.37, and then here's some smaller support levels. We have the descending trend line, which could offer additional support, but ideally it doesn't even trend down much more. Ideally, we're turning around somewhere in this region, maybe a little lower. The 100% extension target of the A wave, that's actually at 89.67. I mean, this is typically an ideal target for a C wave, but I don't want to say we are definitely getting there, because for me, it's more like, okay, there's a level to watch, a level of interest, certainly something to observe if the price gets there. But in a correction, it's more about understanding what is the support level. It's at $84. As long as that is holding, we're focusing on higher. And the only question really that should be of relevance is, can the market form a reversal before breaking below $84? And at the moment, I think it's looking quite good. If things change, I'll let you know. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.